The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 23rd Webinar Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, inside the Tiger's Den, hey, any ping will do. So let's go ahead and get this show started on wonderful Webinar Wednesday. That's because I'm doing a webinar in just a few hours, 5 o'clock this evening. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading off 140 points. 24,694 is the print. S&P's down 9 at 27.15. NASDAQ is flat, trading out at 68.94. Russell's off a couple of points. Semis down 5. Trannies are back 1% or 102 points. Spot volatility index, no big deal, trading out at 13.56. Gold's back about $2. Silver's down 15 pennies. Light sweet crude off 11 cents. 30-year Treasury, that's had a full point move to the upside. If we take a look at what's leading the chart here, it is the Blue Box Company. It is Tiffany, up $20 and change. That's 20%. Ralph Lauren just behind, 15% or $17. AutoZone having a good day today. I thought they got trashed yesterday. No trash today, up $13 or 2%. Lowe's up $8.60. Align Technology, $7. Netflix up $7 as well. To the downside, it is Red Robin Gourmet Burgers. They're serving them rare today, down 19% or $11. CEO is the ticker symbol, CNOOC Limited. I'm not even going to say Canuck, because what is that, actually? Anyways, they're down 5% or $9. BlackRock Industries, BLK, down 8.83. Thor is off 6.16. Mettler Toledo down 1% or $5. Of course, I want to look at what you want to look at. The first request came from John in Sarasota. John's question was, is now a good time to buy Hershey's, HSY? John, anytime is a good time to buy Hershey's if it's the candy bar that you're buying. Who could say no to a Hershey bar? And they got it all covered, right? They got just your traditional milk chocolate, and then they got that special dark chocolate. So if you're going to buy me one, get me one of those special dark ones. But, of course, John was wondering if he should make an investment other than in the candy of Hershey's. We take a look at it straight out at 91.65. We've got our daily, our weekly, and our monthly TAS market profiles. So you can see we're trading in between the top and the bottom, just below the bottom or just below the center line of the daily time frame chart. So, John, this says, hey, 89.64 might be a nice buy if price was coming back with light volume. This is a equally distributed box. We don't know. Well, we do know. It's neither bulls nor bears that have control of this box. So where price can head to is anybody's guess. Bull or bear. That doesn't mean it's bad. It just means it's a neutral structured box. We don't have a lot of those, but when they do, now inside the weekly time frame box out here, that doesn't look good because you're trading well below the bottom of that. That was a bullish structured box, so no good there. And inside the monthly, no good there either. But let's leave these charts and let's go take a look at Stevie's other signals out here. Let's take a look at Hershey's from a daily time frame. And what we're going to see, John, is that as this thing was moving lower, what I mean by moving lower, into the low that formed out here, looks like on May the 3rd, price had been moving lower, doing less relative energy, and you did get the bulls that actually stepped in on May the 4th. So if you're hankering to go long Hershey, now is probably the time to do it. Yeah, I could tell you $91 would be better than $91.67. Let's not fight over 67 pennies out here if this is what you want to do. You just don't want to see it close below that low. So your reward risk is pretty good here. You're not backing up the truck, the Hershey truck, so to speak. It just tells you, this chart tells you it's trying to form a bottom out here. It's trying. It's making an attempt. No signs of strength. I don't think if we look at that daily time frame chart real quickly, I don't see a real sign of strength off the bottom. Maybe the trading day of May 15th out here, but no real breakouts or anything at this stage of the game. If we switch from daily to weekly, right, because I'm assuming, bad choice on my part to assume anything out here, but I'm guessing there. Guessing is better. You're looking at this for more of a long-term holding. And if we look at the weekly time frame chart, well, we don't like it. Why don't we like it? Because it's trading below Stevie's red line. The price oscillator is below zero. This has a falling price oscillator below zero. There's no other way to make it. If I start doing my wave counts to the downside, try to figure out where we're at, I don't see a G pop up. I always like to see those G's pop. We like to see a market singing in a key of G. We don't have that as we speak inside of Hershey's on a weekly basis. So, John, I'd say if we're my money out here, I'd wait for this to close above Stevie's red line on a weekly basis. That's 93.79, because otherwise this thing could just simply head lower. And by heading lower, let's go take a look at the monthly chart. Let's go see if there's any signals out here. Just looking for signals, just searching around, and the answer is no. It's trading back into a series of swing points in the 2016, 15 time frame. I'm assuming that is where we're at out here. Maybe it was 2016. I can't get my my thingamajig to work. I don't know why that is. And you hate when your thingamajig isn't working. I'm referring to the old mouse here, but it's not. But look, here's the deal, John. Price could easily fall back on a monthly basis, on a long-term basis, into about the 67, 96 type area out here. So to summarize Hershey, look, if you're hankering to get in, the daily chart says, okay, it's worth a stab. Don't let it close below the low out here of May the 3rd. That would be 89.10. And don't expect that this thing is going to get up above 94.50 anytime too soon out here. So that's what I see when I take a look at Hershey's. But it is always a good time to buy a Hershey candy bar. So go on out and do that. No other questions that I see that come in inside the Tiger's Den or by email. But I'll check those during the break. If I can't find an email or request, I'll come up with something to chat about. Steve Rhodes with TFNN. Dollars off 134, S&P down 9. We'll be right back. One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which which is how to follow the money and do so in multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no-questions-asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 132. S&P is down 9. So let's take a tour around the indices. Try to get a feel for what they're doing, what you want to be watching for come the end of the trading session. So let's start off by taking a look at the S&P 500. We look at the S&P 500. That's a chart that's up on our screen right now. This is the day that the bulls have been waiting for. Maybe the bears too, but it certainly is the day the bulls and bears have been waiting for. Why do I say that? I say that because on the trading session, I believe was May the 14th, May the 14th out here, May the 14th and May the 12th, 11th, either of those days is when that price oscillator, difference between two exponential moving averages, that's the bottom panel of our screen, got right to that infamous zero level. Now, nothing is a zero out here, but when price gets up to that zero level, it just simply tells you to anticipate that over the coming sessions, I don't know how else to phrase it, because I don't know exactly how many sessions that is, but over the coming sessions, that what we ought to see is price and Stevie's red line. That's the oscillator and change line catch up to each other. Voila, we are now here today. The level of that oscillator and change line, I'll see if I can give you the exact number right now, but it seems like things are a bit slow on my system. Could be because I have so many charts open up. But it's 2712 is the number out there, just in preparation for this evening's workshop. So 2712 is the number. Thus far, you have a bullish test. You have a test and rejection. What happens if price closes below that? Well, it's no longer a bullish test. It doesn't mean that it's bearish. It just means there would be more retracement to anticipate. But all that is occurring in the S&P 500 as we speak right now is exactly what you anticipated on May 11th or May 14th. That's it, which is really just a test of support as we speak. So it's going to be all about the close out here. Now, look, resistance isn't that much further to the upside. 2765-ish is the area. 2768. That is a resistance zone out here inside of the S&P 500. So we're coming into a holiday weekend. I don't know if the Fed minutes are going to really go ahead and get this market churning. It's Wednesday. People are starting to head for the hills, those that like to go to the hills, and others are heading for the Hamptons, for those that like to go out to the beach. So probably not a lot of action for the rest of the week. Although somebody might think this looks like a lot of action, no action, Jackson. Just a test of Stevie's red line. If we go take a look at the Dow Jones Industrials out here, what is it doing? The same exact thing. What did price do? Pulled back, tested, thus far has rejected Stevie's red line. This is a bullish test. Again, I don't know where price ends the day. If it closes, what I should do to maybe make this quicker. Let me see if I can find a way to get that tool. There we go. Let's see if this actually does it. So the red line reading inside of this chart for the Dow is 24,690.96. My apology for having to look to the left, but maybe you're just looking at my chart anyways. You don't even know that I'm looking to the left. So what am I even worried about it? I'm giving you the number, 24,690.96 out there. So at this stage, this would be a bullish test. Now there's resistance, which is where price ran into, which would be the high of 2 trading sessions ago out here. You get above that, specifically, the number would be, okay, 25, 130.12. You get above 25, 130.12. It is a guarantee that the character of this market has changed and prices are headed higher. It really is that simple to be able to make these calls. That's a beautiful thing. You gotta love clarity. Now look, when the market reveals new information to us, then so be it, and then we will go to that new information. If we take a look at the Russell 2000, this is kind of the interesting one out here. You got the Russell pulling back just slightly. I mean, 3.2 points right now. And what is it doing? Testing Stevie's red line. That's it. Now, yesterday was a bearish engulfing candle. Some people could call this a 3-drive to a top pattern. I'd say, go back to your books. That's not a 3-drive to a top pattern. You're forcing it out here. But nonetheless, there is an A to B equals CD out here. Let's get rid of that because really, no, this is not it out there. But we can draw in the A to B equals CD pattern. I think that is at least in play out here. And yesterday would have been, well, it didn't actually make it, which would have been getting up to 1655 out there. But so far, Russell 2000 pulling back, testing Stevie's red line. It's just a bullish test out here. Let's go to Ormond Beach and speak with Mike. Mike, thanks for calling. Thanks for holding. How are you today?
Steve, I'm doing great, and I wanted to congratulate you on your title of being #1 market timer.
Well, thank you very much. I appreciate that. A lot of hard work. The harder work is now trying to stay on top. I don't want anybody else to take that hill.
Well, you taught us a lot of great things throughout the years. You had great webinars, and you added a lot to my TFNN educational vocabulary, so I really appreciate that.
Hey, that's what we're here for. We're without you guys, we'd be nowhere. So we're glad to hear that.
Okay, Steve, I've been trading Pan American Silver, and I've been in and out a number of times. And would you be interested? Would you think? What would you think would be a good price to try to get back in at?
So if we take a look at Pan American Silver, the chart that's on my screen has the daily, weekly, and monthly profiles for you. But to answer your question, I'm going to skip right to the chase, and we're going to skip those charts altogether because it's really in line with what we had just been talking about. For example, we've been expecting that the Dow would pull back, that the S&P would pull back to Stevie's red line because its price oscillator had gotten to 0. 2 trading sessions ago, I'm on a weekly chart. Oh, okay. Well, that's okay. This is actually good. So in Pan American Silver right now, Mike, I'm on a weekly time frame chart. And so 2 weeks ago, we saw its price oscillator get up to the 0 level. Now, that may have been the bullish test. But if not, I was going to give you the answer. It would be 1684. So that's what the weekly says. So I just jot that down on a pad of paper, 1684. Let me go take a look at the daily time frame chart out here, see if there's maybe a little bit better signal or any type of a signal out here. You know, and the daily chart says, yeah, you know what, you might as well stay put and wait for a retracement. Now, the next level of support is at 1777 on a daily basis. You came close to that this morning, but you didn't exactly hit it. Mike, one of the things I'm looking for out here is, or I'm looking at, I should say, is this nice little area of resistance, this little shooting star from May the 12th. And it actually worked, and price pushed its way down the very next day. It pushed itself down right into that red line support area. So maybe the move lower is over. You said, so let me get more information from you, because you've been trading around this. So help me better understand the trading plan, so that I don't have to be wishy-washy.
Yeah, I did a couple of short-term trades with it in the last 2 or 3 months, and like I said, I'm looking. I got out the last couple times when it got above like 18, and so I'm looking in an area to try to get back in.
Yeah, it's a great little consolidation if you like them. Most people don't. But this thing has been consolidating since 2016, since probably around April of 2016. And we're well away from the bottom of that consolidation level in the 14 area. Stick through this break, if you would, and
Sure.
we'll wrap it up and try to point you in the right direction on Pan American Silver.
Awesome.
Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, and welcome back, Mike from Ormond Beach. Folks, we're taking a look at Pan American Silver. In essence, we're trying to answer a question about Pan American Silver. When should Mike consider getting back in? So, Mike, during the break, I did a couple of things out here. Now, even though we're talking about silver, and we take a look at the Pan American Silver chart on the top portion of my screen here, I was just wanted to see what its correlation was to the direction of gold, as opposed to silver. And we can see here, whenever the bars are above zero, then it tells you there's a positive correlation, meaning the two instruments are moving in the same direction. That is the predominant pattern or correlation between Pan American Silver and gold out here. And that being said, the reason that I went to gold was a couple of fold out here. One, if I take a look at where price is trading right now with regard to its TAS market profiles, there was a bullish structured box that formed two trading sessions yesterday, as a matter of fact. And right now we're trading at 1289.60. And, Mike, that is below the bottom of the box of 1291.30. Never good to trade below a brand new box, especially that was bullish structured in nature. I don't know where the close comes in, but if we trade below the bottom of this box, it says being long is on the wrong side of the trade. Then I would say, with regard to Pan American Silver, telling you to be long today would be the wrong side of that trade, too. You kind of follow the logic there, even if it's not as logical as it could be. So that's number two. Then I say, okay, let's go take a look at the gold contract, the June contract for gold, using Stevie's. Oh, did I do that? Son of a gun. I just deleted the chart. Now, that is bad news. I'm going to tell you what it said, Mike. It said we were trading below Stevie's red line and that today so far has been a test and rejection of that level. And what that really sets up, I can draw it in on this chart here, is an A to B equals CD to the downside. And at this stage, I think this is the active pattern until the information reveals something different to you or I. And that is that we should see gold get down to the 1265 level, maybe below 1265. The one-to-one area is 1265. I would then say, if this is how things unfold, this is how it looks at 1:32 in the afternoon, then because of that correlation, and as long as Pan American Silver is holding up well, that would be your entry point, assuming that we see some type of support or some type of pattern that gold has hit and completed should price move down to that area. I think that's the better way to answer your question and gauge what you should do, and not worry and focus so much on the price, but instead wait till we see a good bottom in gold, and I don't see that as we speak right now.
All right. Well, I really appreciate that, Steve, and that's why I called you, because you always give a different point of view. And
okay.
Great.
Well, then let me just add to that point of view. It's really possible that if it plays out this way, 1265 will not be the low inside of gold out here. And the reason that I say that is because this really has had a shallow retracement, a less than a 0.382 retracement, which was into the bounce of May 11th out there. And that being said, then you're likely to get a 1 to 1.272 or a 1 to 1.618 A to B equals CD pattern. I don't know why they're not on my screen out here, but it would say to us that we would likely get lower price. 1246 would be one of those numbers that it could hit, or even the 1.618, which would take us to 1220. 1223. So I'd say just be patient out there. And then, Mike, if to the extent that you would track gold and the U.S. dollar index, what we see happening inside the U.S. dollar index is that it's now above its seventh wave move that took place a few days ago. And a few days ago was a Tom DeMark combo count out here. And yesterday and today have been nothing more than a test of Stevie's red line. So the U.S. dollar index wants to move higher. And I can share with you that by next Friday, if we continue to see this gradual movement higher in the U.S. dollar index, it has made another major bottom. And the U.S. dollar index is going to head to higher highs. Fundamentally, why? I don't know if it's because of repatriation or whatever else it might be out there. But, to the extent that you're going to track gold and U.S. dollar index, it is as bullish as you can get right now, the U.S. dollar index.
Yeah. Yeah, I know Basil mentioned that, too, that he had a target up there a little bit higher than where we are now. So.
Yeah, it's well, it's when I shared with you what I did, I think I can do that on this chart right here, as long as I've got you on the horn. What I'm going to do is take a look at that's a continuous contract. It's the only way for me to look at this with all this data, and we're going to skip from the daily to the monthly time frame. What you're going to see out here is price right now is trading above on a monthly basis is trading just slightly above Stevie's red line, and that's with its price oscillator getting right down to zero. It's just above zero. It could not possibly get more bullish than this. If this were Friday of next week, the end of the month, then we would have an uber bullish call on the U.S. dollar. So how that would impact gold, that's I know how it will impact. I know how it will impact bonds in local currency across the globe out here. It'll just trash them, just totally trash them. So that's my take, my friend.
Okay. Well, I appreciate your observations that gave me more things to be cautious about. I really appreciate that. Thanks.
That's good. We always like to say something to think about. Thanks for calling. That was Mike in Ormond Beach out there, and so good conversation. There were some questions inside the den earlier. I should get back to those. There was a question if I could take a look at the S&P and NASDAQ futures contract, and the question is what price signals lower price? Or what signals lower price out here? And then Clay was asking, which red line do you go by when different time frames have different red lines? Well, every different time frame, Clay, has to have a different Stevie red line. And the answer is, if you're let's just say you are managing your long-term portfolio, your 401k, your retirement type funds out there, you're not gonna pay attention to a daily chart or daily time frame. For the most part. I can have a couple of exceptions, but they're far and few between out there. So you would stay with the monthly time frame charts, maybe the weekly time frame charts, but you'd only be looking at the weekly time frame charts and maybe the daily when you saw some type of big move to the upside or downside. You're looking to see if there's some type of imminent turn possibly out here. So you just need to stay within. You need to stay inside. From an investment standpoint. If you are in a trading standpoint, and you've entered into a trade based on a 30-minute time frame chart as an example, I'll give you the example out here. Let's say you're a trader of the ES Mini. If you're a trader of the ES Mini, then you know that yesterday at 10:30, the ES Mini gave you a topping signal. What do you mean you know that it gave it? It's what we talk about all the time. Price moved higher, doing less relative energy out there. You get the old bears that show up. Price finds support at another dash line, the time to mark, trend line out here. You get the kibosh right through that at the trading time period of 3 o'clock. That's after testing Stevie's red line. That's after an earlier morning topping signal. Of course, price went lower. Yeah. Now, if you're on that 30-minute time frame, you had reason to go ahead and cover your profits out there. Stick with the chart and the time frame of what it is you're trading out there, and you'll do just fine using Stevie's red line. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the questions are rolling in now, so let me get right to them. There was a question about the ES Mini specifically. What price would I need to see, in essence, taken out in order to project lower price? I think it's so. When we took a look at the S&P 500, we know the price came down to test Stevie's red line. So what we have to the same thing going on inside the ES Mini as we speak. Same thing, by the way, inside the NQ as we speak right now, 142. Inside the ES Mini, we can see the price is pulled back to test the top of its weekly box. That was a bear structured box. So now what we're seeing here last week and now this week, in fact, is that old resistance has become new support. At a minimum, you've got to see it close below 27.05. You're at 27.16. Shouldn't be too tough to do. But that's a weekly basis out here. Really, it's 26.79 on a weekly basis. You would want to see it close below that level. But what you have is the daily profile. And price could easily pull back into the 26.89 level, and there's nothing wrong because that is the bottom of a daily box out here. So to give you the final answer, that would be 26.89 that I would be looking for inside of the ES. Inside the NQ, the number would have to be 67.31. That's quite a ways away from where we are trading right now. To the upside, what I'd be watching for is continued closes above 69.42. And we're trading right now at 68.97. So 69.42, 43 says you run up to the 7,013 area. I don't know which one is going to occur. What I'd like to see, and here comes the exception, because we were looking at the 30-minute time frame chart and how this formed a nice top out here. And maybe things have shifted to a 30-minute time frame. And if we could see one push below the low of, will that work? Yeah, that would work. Yeah, it'd still work out here. If we could see a push below the low so far this morning, then we could get the same type of bottoming pattern that we had up at the top out there. So that's what I see. Hopefully that helps answer your question with regard to the ES and the NQ out here. James writes in, let's see, Steve, where do you see the SPY or IVB going short term? And if you have your time, you're long and else on DGRO. So because of take a look at the ES Mini and S&P 500, James, let's go with your latter question, because I think in essence we've pretty much answered that. This week we talked about probably not a lot to the upside. Downside, at this stage, we're just testing support. So really, for the next couple of days, maybe not a whole lot. All that today was, all that last night was nothing more than a test of support on a daily basis. So let's go take a look at DGRO out here. And as we take a look at that as a core dividend growth ETF, and so you just want me to look at it. I'm looking at it. That qualifies. We're done. Now, if we take a look at the iShares core dividend growth, you know what this has done? I'm going to go take a look at the weekly time frame for you. Because at this stage here, prices run into resistance. This box, slightly bearish in structure. The top is 34.76. You're trading at 34.62. Probably don't see this going a whole lot as well this week. You'd like to see a weekly close above 34.76. If you get that, then you can go run back to the highs or at least to the low of the week of January 29th, and that would be 35.70. That's what I see, James, when I take a look at DG. I hope that helps you out. And again, I hope the conversation about the S&P really helped you with the SPY. Chris P. writes in, would I please look at TIF? TIF, I'd like to short it up to 20% in 1 day. Really? I don't know. Let's go see. What is TIF? Tiffany's. Tiffany's? The blue box company? Oh, my goodness. Chris wants to play with fire, and she wants me to condone those activities. I do not like to play with fire. Let's go see if the move inside of Tiffany's is a good one. Well, we know it's a good one. Is it a real one in a game of liar's poker? Oh, this is a bummer. It may not show up on my other chart for some reason, so I'm going to have to, oh, no, I take that back. Man, what a move. What a move inside of Tiffany. Chris, is this because you were buying out the store inside of Tiffany's? You know, volume, 8.6 million shares. That's big volume out here for this equity. Let me go to, well, I guess I had the weekly time frame. Let me actually pull up the weekly chart so I don't screw myself up out here. Let me actually come to the monthly chart. Monthly time frame chart. So here's what I would share with you, Chris. And there's a couple different A to B equals CD tools out here. I'm using the conservative one on the monthly, and it is very conservative. But the point that I want to make is what's really important. So whether this is the right A to B equals CD or whether I should start at the 2009 low doesn't really matter. It's going to accomplish the same thing. But if we start with the A point in June of 2012 of 49.72, moves up to a high November of 2014, 110.60, makes an 88% retracement. You know, we've made the one-to-one today, and it's with a wide-ranging bar. And markets don't end on wide-ranging bars. That's the point. Markets don't end on wide-ranging bars. So short it for a 20% drop because you think it's going to fill the gap. Maybe that's the thought that's out there. Let me put this on a quarterly chart. I'm just going to take a look at volume here, right? Because here's the A to B equals CD inside the longer-term one for Tiffany's. So on a quarterly basis, October 2014, it did 72 million. We're at 66 million right now. Pretty good chance on a quarterly basis, Chris, that we're Tiffany's. If you want to short Tiffany, I'll give you the price to go short of that. But you're going to have to sit and wait for a long time. Well, or some period of time. Because it looks more likely to me, Tiffany is headed to 150 to 176 before you can actually go ahead and short this little puppy out there. So I don't see anything in my signals to say, hey, this is some kind of exhaustion move. This, on a quarterly basis, is its widest ranging bar in history. Now, the quarter is not over. In fact, this quarter is not over until June, right? So things could certainly change out here. But, you know, as we speak right now, nah, I wouldn't do it. Gaps are your friends. You just have to color them in because then they turn out to be wide-ranging bars, just like it looks right here on this weekly time frame chart. And that is a doozy. So I say don't be looking at the short inside of this. If there were shorts, maybe that explains the squeeze that is going on today as Tiffany just simply ramps up and takes off topside. So, Chris, I hope that helps you out. JJ writes in, what minute what day will the market go back to the January highs? Too funny. The January highs, the day and minute. Man, am I glad we're going to a break. Here's the deal. I can give you a projection, but I cannot give you a prediction. It is as simple as that. I do not have a crystal ball. I have Stevie's red line. I think that's pretty good, but I do not have Stevie's crystal ball. But are the markets headed back to the January highs and beyond? The answer is yes. I'll just tell you which day and which minute. Thanks for asking me. That was JJ writing in. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TFNN Memorial Day Tiger Dollar Special has just been announced. For 1 week only, we're doubling the bonuses that we normally give out with any Tiger Dollar purchase. Normally, when you purchase Tiger Dollars, you can receive a 10, 15, or 20% bonus with your purchase, but through Memorial Day only, we've doubled the bonuses to 20, 30, and even 40%. This is one of the best Tiger Dollar sales that we offer, and they only come around a couple times a year, so don't let it pass you by. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So whether you're already a subscriber and want to add savings to your monthly or yearly subscription, or you're thinking about signing up for anything in the future, now is a great time to get your Tiger Dollars. For all the details on the Memorial Day Tiger Dollar Special, visit the front page of TFNN.com before this deal ends May 28th.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
So many questions, so little time. And if I don't get to your question, I will tomorrow. Colt wants to get in on Box from a long-term standpoint, wants to know what I think. Here's what I see right now is 154 in the afternoon on Wednesday, Colt, and that is that prices have been moving higher, doing with less relative energy. We have a bearish engulfing candle that has formed. I don't know what it looks like at Friday, but right now, this says to me that Box is going to go ahead and pull back. The first target becomes Stevie's red line, 24.49. So I would sit tight I would see what happens as prices testing Stevie's red line on a weekly basis out there. You want to see that hold because that was also a breakout area, pretty close to it. Looking at the high from December the 1st out there, that high should hold. That is slightly below Stevie's red line. That's priced at 24.10. If you see price get back inside there, then we're looking at a possible pullback into the $18 range. The first things first. The says price wants to pull back. Let's see what happens at Stevie's red line on a weekly basis at 24.49 as we speak right now. We had a request to go take a look at, I believe this was from Phil, wants to take a look at ticker symbol BZUN, Bowsen out here, and Phil is in this and is looking for some type of price projection. Well, this thing has been moving higher, took out a B point. I'm using a conservative A to B equals CD. That's a March 21st daily time frame of 2.2 million shares. Was taken out with 14 million shares. You have a confirmed A to B equals CD. That says 62.24 is the next target, 67.82 after that. The last question, I believe, it's from Tim. He wants to take a look at VGK. And VGK, Tim wants to know, boy, do I minimize your losses and cut out of this? I wish I had more time. What you don't like is that it's trading below the daily profile, 59.32, but volume-wise, not so bad. I need more time to look at this. Tim will do that tomorrow. Hey, folks, I've got a workshop coming up tonight. Perhaps of all the workshops that I've done, this may be the single most important workshop that I ever do at TFNN. And I absolutely, positively mean it. And you know how good those other tools are. So hopefully I'll see you there. And if I do, that's great. If not, you can catch the archive. And if not, well, oh well. Hey, stay tuned. David White's up next. Have a great Wednesday. I'll see you soon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.